Okay, hello everyone. We're going to get started. Thank you for joining me today. Good morning, good afternoon, depending on where you are in the country. Hi, I am Greg Yotis, the Senior Sales Director for Life and Annuities here at Pinnacle. And today's topic, we're going to actually be going through the power of the nationwide Peak 10 fixed indexed annuity and all that that has to offer. But before we jump into our topic today, just want to let you know, as you may be aware, but this is a perfect topic for June, since June is Annuity Awareness Month. Um, so we are highlighting annuities all the way through the month. And also want to share you some information about our Pinnacle Championship Series that we're going to be hosting this year, and a little bit about our website. So with that, just want to let everyone know that Pinnacle's annual championship series this year is going to be September 18th in Orlando, Florida at the Kia Center. Anyone who's familiar with the Orlando Magic from the NBA, that is where they play. So we're going to have a great day there. Full Medicare, ACA, annuities, life, ancillary health insurance. We're going to be covering everything. If you go to our website and go to the About section and go to events, you can see the championship series. And if you hit Learn More, you can go ahead and register for that event. Easy to register. There's no obligation, but this way you'll get communications as far as times, the agenda, key speakers that we're going to have there. So please, if you're able to attend, it's going to be a great day of learning, excitement, cocktails, food, everything. So we're going to have sponsors there, and you get a chance to mingle with other agents and find out how they're having success with different things. So great learning opportunity, great event. We had them last year, and they were a success. We had 3 of them last year, and they were a success. So just wanted to let everyone know that. And you don't need to be with Pinnacle to attend. If you aren't with Pinnacle, you can definitely come and see what Pinnacle's about. As always, in the About section of our website, the pfsinsurance.com. May not have mentioned that previously, but if you need my contact information, you can go contact our team, and the sales directors are all listed. And computer is going a little slow today, so this will pop up. Like we're having a little technical difficulty. But in that section, you can find me, Greg Yotis, my contact information, my phone number, direct phone number, and email address. Not sure why that's not coming up, but we'll just pass by that. And then always, if you need to get contracted with us, and it's a simple process for getting contracted with Pinnacle, you can go to our contracting link here and hit Contract Now. Fill out the application. You don't have to, get contract with any certain number of carriers. Even if you want to get contracted with one carrier, you can do so, just to give us a shot and see what Pinnacle's about. I'm sure you won't be disappointed. With that, I'm going to get started with our topic today, which is the Peak 10. And as I go through the presentation, if you have any questions, please type your questions in the chat section, and we'll answer those questions at the end of the presentation. So with that, let me go. So yeah, the nationwide Peak 10 is a very, very strong fixed index annuity product. It is pretty much exclusive. Not many IMOs, BGAs out there have access to it, so we are one of the lucky few that can actually offer it. But it's a great fixed indexed annuity, both for accumulation, but specifically for guaranteed lifetime income. And we'll go through the features and benefits of that just to show you exactly how strong it is. So, first we're going to cover why Nationwide and talk a little bit about Nationwide. It's important to have a strong carrier at your back when you're meeting with your clients. And then you also have the the backing of that for your product as well. The Nationwide Peak 10, we'll go talk about the features that it offers and how to position it with your clients. We also have some sales ideas in there to help you win the business. And then we'll follow up, with, like I said, with questions at the end. Just type those in the chat box. So why would you want to work with Nationwide if you aren't already? Okay, so for guaranteed income back strength of the Nationwide, it's a top, Fortune 100 best company, AM best rated, Fortune 100, Moody's, and an A plus Standard & Poor's. So the crediting agencies really understand and know that Nationwide is a very strong company in the financial services, probably one of the biggest in the world. So you have the strength of Nationwide behind you, and as always, they have commercials, so the brand recognition, your clients are going to understand and know who Nationwide is as well. Everyone knows Peyton Manning's commercials, sees them on TV, so great brand recognition. The financial strength of the company, they total investment over $123 billion, $270 billion in total assets. So, not to get into this, but you can see how big and how strong of a company and the capital strength it is. So you and your clients can have peace of mind knowing putting your business with Nationwide. So, just a couple of things, because they don't always do annuities. They are the eighth largest life insurance carrier. They're top annuity writers, both on the variable annuity and the fixed index. So top 10 across the board. They do a lot of fee-based, but for us, it's fixed index annuity and this great product that we have. So we're going to go through a couple different parts of the Nationwide Peak 10 to kind of uncover the benefits and the features of it. So, we're going to talk about how it protects you from market risk, which right now is a huge concern based on the volatility of the market. So anyone out there of your clients that are in any type of variable, they've experienced those ups and downs and how crazy that can be. So we'll talk about the market risk protection there, or the downside risk, the growth potential and the guarantees that this product offers, and the best special feature it has to protect the spouse as well for this guaranteed lifetime income. So who is the Peak 10 designed for? All right, they're going to be clients that are seeking principal protection with upside market potential. So like I said, that downside protection is huge right now with the volatility in the markets. I always say if you're getting close to retirement or in the beginning stages of retirement, you need that downside protection. You don't want to experience a 30% downturn when you're getting ready or in the beginning stages of retirement, just because you don't have enough time to make that up. Somebody who's maybe looking for some higher interest rates other than other fixed index options. So if you have somebody who's thinking about maybe a multi-year guaranteed annuity, a 5-year multi-year guaranteed annuity is only paying about 5%, a little over 5% these days. So if you want somebody, if the person wants something a little bit higher than that, the fixed index annuity is a great option. Anyone, like I said, who has mutual funds, stocks, variable annuities, anything that's at risk, 401ks are huge. Any kind of money that you're going to want to get an income from. I would say any qualified money, so any money coming from a retirement plan, is huge too, especially because, as we know, once you turn 73, you have to start taking those required minimum distributions anyway. So you might as well get lifetime income and make sure that the client never outlives that money that they've spent saving. Okay, so a little bit about the product details. You can do, these are going to be for individuals. These are single purchase payments. So, just a one-time payment that goes in there. Minimum initial investment is $25K, both for the qualified and non-qualified. Now, you can't make any subsequent payments, so this is not a flexible premium. It's a one-time dump in. If you do have, if you had other assets or your client had other assets that they want to put in, they would just have to open up a separate annuity account. It could be for the same product. Maximum issue ages, this is a big one, 85 for single or on the annuitant for single or joint life. The owner can be any age. So if you have, a husband and wife, and the husband's 90, but the wife is, under 85, you can still do it. It's going to cover all those product types, the non-qualified, of course, IRA, Roth IRA, SEP, simple, charitable remainder trusts and 401ks, anything in the 401 retirement area. You can do a 1035 or a rollover into this product. Death benefit's always going to be equal to whatever the contract value is, and so that's going to be what goes to the beneficiaries. And there is a joint option on the death benefit available if the spouse is the co-annuitant, and we're going to talk a little bit more about that in later slides. Contract tiers for the fixed index annuities, anything under, or I'll just say anything over 100,000 into the product is going to get a little bit higher of caps and participation rates based on the amount that they're putting in. That's all that means. So product details, surrender charge schedule. It's a 10-year product, so the surrender charge lasts for 10 years. As you can see, it goes 10, 10, 9, 8, 7, 6, all the way down to 0 after the 10th year. There is a 10% free out, so the client can always take out 10% of the contract value during that 10-year period with no surrender charge hitting it. Once they go above the 10%, then the surrender schedule would kick in. Long-term care waiver is also part of the product, available after the first completed contract year at a maximum issue age of 80. So that way, if they go into a long-term care facility, all the surrender charges are waived, and they can use that money to pay for their long-term care, any of the cash value. Also, on the terminal illness or injury waiver, that also is a maximum age of 80 and available after the first year as well. So it gives the client a little bit extra flexibility in case things happen down in the future that they need to access the money and they don't want to worry about those surrender charges. As always with the market value adjustment, way to think about that is when they do take the money out, it could negatively or positively impact their withdrawal depending on where the rates are at the time that they take those withdrawals. So won't spend too much time on that. However, the big point there is that it does not apply to withdrawals once you're taking the long-term care confinement waiver or the terminal illness waiver. So to give you a little bit break there. And then like always for the fixed index annuities, we'll talk about the different index segments. So have a really quality of investment choices here. We have your AB Growth Value Index, your Global H Factor Index, JP Morgan Cycle, of course the S&P 500, and then the S&P 5 Daily Risk Control. So you can diversify between those. A lot of times when we're building these illustrations, we do go with the Global H Factor because it has a really high participation rate. And I feel like because there's the downside protection, that you might as well swing for the fences for some higher returns since there's no risk of having negative returns. But if you had somebody who wanted to play it a little bit more conservatively and was looking for more accumulation over time on a conservative nature, the S&P 500 composite is always a great option, as well as the S&P Daily Risk Control. So protection for the spouse. So the need here in this example, 65-year-old couple, one spouse can expect to live well into their 90s. So the joint option is a benefit that's going to allow the contract owner to name the spouse as the co-annuitant, and allows the death benefit to be paid to either spouse no matter who passes away first. So just a little extra feature there because in most cases, if it didn't have this feature and you're the co-annuitant or not the co-annuitant, then the person would have to open up an inherited annuity. This gives them the flexibility of being able to either take the money and do something else with it, or actually continue the annuity as if it was theirs from the beginning, and not joint. So gives the spouse a little extra flexibility, really helps those couples for planning for retirement. And just a little bit of an example of how that spousal protection benefit would work, with or without it. So in this scenario, Lisa, she's going to purchase she's the owner, she's going to purchase the annuity. In the left-hand side, what happens if she names Mark, her husband, as the co-annuitant, and they select the joint option, and Mark passes away? Basically, she has the opportunity. She could take a lump sum payout as a death benefit at that point, or she has the option to continue the annuity contract at the death benefit level. So she doesn't have to take an inherited IRA. She could just take it as if it's hers personally. If they don't elect it, here's what happens: is basically she doesn't name him as the co-defendant, and they don't choose the joint option. Basically, if Mark passes away, no death benefit is paid, and there is no change to Lisa's contract. So she's basically, no matter what happens to Mark, she has to stick with the same exact contract. No way to get out of it. So definitely kind of doesn't give you as many options when that scenario happens. So it's a great opportunity for spouses to help in the retirement planning and have some more flexibility, because as we know, as time goes on, life happens, things change. So the more options you have to solve a problem, the better. So we'll take a look, real quick here on this is an example of an illustration. In this scenario, they're putting in $100,000. Person's age 65. Contract value day one is $100,000. Surrender value, which includes the surrender charge, is $91,000. Your death benefit is always equal to your contract value. And then what you see is your income benefit base is at 100. And we'll get into what makes this product a little bit more special once you add on the income rider. And this is just without the income rider. This is for somebody who's looking for just accumulation purposes and no income. So you'll see your contract value grows based on the earnings that you get from your whatever index segment you generate. So your 100,000 would actually, in this scenario, based on the indexes they chose, at age 75 would be 298,000. So they more than doubled their money in just a 10-year period. And then you see, across the board, the surrender value at that point is equal to the cash value since you're out of surrender at the end of year 10, and same thing for the death benefit. So that's the income option, just having a basic fixed indexed annuity tied to those index segments and letting that money grow without any risk of negative returns. Now, which comes the real juicy part is when you put in the income riders on this product, and we'll go through. So they actually have two income riders that are available on the product. They have the guaranteed income solution, which is really going to be for people who aren't sure if they're going to need the income, but it's a zero cost, so there's no fee for this rider built into the product. Again, giving people flexibility, for those people that aren't sure if they're going to be taking income but kind of want to have the option in case things change and they do want to start taking the income. And then they have the bonus income rider. So these are for the people that absolutely know that they want to take the income out of the product, and this is going to give them higher roll-ups and higher payout percentages and a higher income amount, essentially, for that retirement income. So here, just an example, if they do the guaranteed income solution, which again is at the no cost, just built into the product. you're going to see that basically they're going to get a roll up for the first 10 years of 4% simple interest. So that's 4% simple interest on their income benefit. So that's where the income comes from. And then the cash value, if it outpaces the 4% simple interest, which it should, your contract value is going to actually override your income base, and your income base would be based off of that higher contract value. So gives you a little bit, the 4% gives you a kind of a baseline. It's never going to be less than that. But with your income, with your cash value and the index segment's earnings, you can definitely outpace that 4% and have a higher income benefit. And for anyone who's asking what the income benefit is, the income benefit is exactly where is the number that your income is based off of. So if your income benefit is, in this situation, looks like it's right around 140, a little shy of 140, that's what your income amount is going to be based off of. So how does the guaranteed income solution work? We have a scenario here for Samantha. She's 65. Her goal is an option for guaranteed income, but she's not sure if she's going to use it. So she doesn't want to pay for the bonus rider. So basically, it's age banded, as you can see here, the withdrawal percentages. So this is the percentage that she's going to receive in income based off of her income amount. So in this scenario, she put 100,000 in. She's going to be guaranteed that 4% simple interest roll up on her income benefit. So that 100,000 is going to be growing by 4% every year for the first 10 years, simple interest. So basically, if she starts the income day one, because she's 65 and she falls into the 60 to 71 range, her withdrawal benefit, her withdrawal percentage is 4%. So she drops in 100,000, she's going to get a 4% withdrawal percentage. So she's going to get a lifetime withdrawal, no matter what, of $4,000 a year for the rest of her life. Oops, sorry. And then after 15 years, she's actually already accumulated $60,000 in income. So almost a little bit more than half of what she put in, she's already received back in the first 15 years. Scenario 2 is going to look a lot better because of the 4% roll up and gains or earnings in the cash value. So if she decides to wait to 10 years, she's going to be older. So she's going to be in the 72 plus. So she's going to get 4.5% for the withdrawal percentage. And now her income base, based on the 4% simple interest over the 10-year period, has grown to 140,000. Remember, she's only put in 100,000, and then she's going to get $6,300 annually for the rest of her life. And that actually, after 15 years, comes out to be $94,500, almost the full amount that she put in. She's already gotten back, and then still continues to get that $6,300 a year. So that's how the guaranteed income solution works. And to see that on the illustration, when you're looking at, this is a guaranteed contract minimum. So in this scenario, we put in for a 65-year-old 500,000, and you can see this is basically if there's really no returns whatsoever. You're not going to lose any money. And you see, you don't lose any money here with no returns on the death benefit or the cash value. But the income benefit, even no matter what happens with the index segments, still continues to roll up based on the 4% interest, simple interest. And by year 5 in this scenario, at age 65, when they do want to start taking income, their 500,000 has now grown guaranteed to 600,000, and they get a lifetime withdrawal of $24,000 a year. And then this is just a cumulative, so you can see how every year just add 24,000 to it, and it keeps on growing. And that's how much by year 26 they've already received 528,000 in income. And if they're still living, they're still going to receive that 24. So can't outlive that money. And even in that scenario, like I said, cash value has gone to zero if they've used all their money, but they're still going to get the 24,000 lifetime income. Here's one where we're just looking at the most, recent 10-year repeating. So they take the 10-year returns of the index and just repeat it, so it's a little bit more realistic of what you would experience. Same 500,000, but in this case, you see, with accumulation and earnings growth and the 4% roll up in year 5, when they start taking income, instead of 600,000 like we saw on the guaranteed, their 500,000 has now grown to 850,000. And their income, instead of 24, is 34,039 annually, with the opportunity of it to increase with market performance, and they still going to get that. So over the years, it really, starts to, as you can see, really jump up there with market performance. A couple things to take a look at. You see where, like I said, it's going to grow based on performance, their income, which is huge, especially as inflation happens and those things, so you're not at risk of eating away at that same income amount. Death benefit, they're actually outpacing with performance here in the gross earnings, outpacing what they're taking out in income. Their death benefit actually grows to $4 million. And they've already received at this point $2 million in cumulative withdrawals. Income withdrawals. So really, really strong product. And then this is the bonus income rider, which is even more powerful. So with this one, you're going to get a 20% bonus day one. So in this scenario here, we have your 100,000 day one, your income base jumps up to 120. And then continues to grow based on an 8% simple interest. So remember, with the free rider, you're getting 4% simple interest. With the bonus rider, you double that. You're getting 8% for the first 10 years. So you're seeing, as that income, like I said, the income benefit where your income is generated from continues to grow. You have that baseline of the 8% guarantee. But again, with market performance in year 4 here, it jumps above that 8%. So, you can still, and then at the end of 10 years, that the actual cash value is a little bit more than that 8%, but the 8% gives you a baseline that you can never go below. So let's look at some real life numbers here. For Darren, who's age 65, you see now he has he's electing to have the bonus income rider, which is a charge of 1%. To have this bonus income rider, but it's well worth it for what it gives you. You have the higher lifetime withdrawal percentages, so Bandit with a little bit more bands in there based on age, but as you could see, a lot higher than the guaranteed income option, the free one. So just looking at him, same thing. He's going to put his 100% in. Remember, he's getting a 20% bonus day one. He's getting an 8% simple interest roll up. So if you started the income day one, he's going to be at 120 on his 100,000 that he put in. Based on his age, he's going to be at 6.25 because he's 65. It's going to give him $7,500 of lifetime withdrawal income. After 15 years, he's already received 112,500. So almost as the whole 120,000 he's received in the first 15 years, but still getting that going forward to $7,500 a year. Where it really looks good is if he's going to wait, right? So he puts in the 100,000. He's going to wait 10 years before he withdraws it. His 100,000 has now grown to 216,000 guaranteed. He's older now, so now he's in the 70 to 74 range, or I'm sorry, 75 to 80 range. So he's going to get 7.35 as a withdrawal percentage. His lifetime withdrawal amount is going to be $15,876. And after 15 years, he's going to be over where he started at initially, or where his income has grown to. He's already received $238,140 just in those 15 years, but still going to continue to get that $15,876 annually in income. So very, very powerful rider. Great way to really have your clients on a guaranteed basis increase their initial investment and really maximize those retirement income by waiting. So just to show you in an illustration what that looks like. So in this scenario, we put in $250,000, contract value is $250,000, death benefit $250,000. Day one, it's already grown to $300,000 guaranteed with your 20% bonus. Then you have your 8% roll up, so that $300,000 is now $324,000 and continues to go. By the 5th year, when he's 65, in this scenario, he started it when he was 65, which most people, would hope to retire by. He's got $420,000. So his $250,000 has grown to $420,000. Based on his withdrawal rate, he's going to get, on a guaranteed basis, nothing lower than this, $23,940 in income going forward. And like I said, no matter what, even if the account value goes to zero, still going to be getting that income that you can't outlive. Let's see if they wait, right? Or let's see the non-guaranteed rates, which is a little bit more realistic too. So it's good to have that guarantee and know kind of the baseline. But in this scenario, the $250,000 in year 5, when he's 65, has grown to $420,000. But with market performance, right, he had a really good return there, 26% in year 6. His income is going to jump up to $34,000 and continue to go as the income, as he gets really good returns. Contract value doesn't look like it's going anywhere close to zero. It's continuing to grow, which is huge because now you can, that money is available for your beneficiaries if you ever, once you pass away. And he's already received $1,077,000 in cumulative income by year 25 at age 55, and he's still getting the income. Death benefit, like I said, if he passes away in year 25, beneficiaries are going to receive $1,290,000. So all that income he's received, helping out retirement, keeping you to live that same quality of life that you want in retirement, and then still have money left over as a death benefit to give your heirs, which is huge. So like I said, the bonus income rider, for a single life, it's 1%. If you do the joint rider, remember we talked about with the spouse and being able to have that joint option with the spouse as the annuitant. It's a little bit more, 1.3%, but with everything this rider gives, well worth the cost and those guarantees that you get for it. So really protecting your retirement money. You can take at least, life happens, so the rider does allow you to take at least one non-lifetime withdrawal, and it won't stop your 8% roll-up. So that gives you a little bit of flexibility, but once you turn on the rider, you're locked into the rider. There's no way to stop it. Joint option, like I said, is going to guarantee that surviving spouse can continue that same lifetime withdrawals. So very important for a husband and wife to make sure that their retirement is secure, and that if somebody passes away prematurely, their income isn't sacrificed for them. So just to recap, we talked about the strengths of, having market protection from market risk and not being able to have a return less than zero. So, you may have heard before, zero is your hero. So you're not going to lose any money. Your money is protected. You have your great growth potential and guarantees with both the index segments and then also with the riders. You have spousal protection and then that guaranteed income for life. I always say guaranteed income for life. It's the only way you can give yourself basically a personal pension. So that is basically everything I wanted to cover on the product. I will see. There looks like there's some questions. We'll take some questions. Yeah, we can email you out at the presentation. So we have a question here. Are the beneficiaries only allotted to the spouse, or does it include the children? So for the beneficiary, which is different than the co-annuitant, like I said, the co-annuitant actually gives the spouse a little bit more flexibility in continuing the annuity once one of the spouses passes away. Beneficiaries, they can name whoever they want as the beneficiary. So yes, they can definitely include the children as the beneficiaries, which, especially if you have a joint husband and wife solution, in most cases that's what they're going to do, is name the beneficiaries. We asked, unfortunately, this product is not available in New York or California. So unfortunately, New York and California are always the tough states. A lot of carriers don't offer their products there, but unfortunately, this product is not available in New York and California. I think that is all that we had for questions. Looks like we may get another. Question is, what's the most comparable product? I would say not many products can compete with this. Emeritus does have an income product which comes close to it, and may, be equal or greater in the beginning years, but in the later years, I haven't seen a product that really, if you wait the full 10 years and get the 20% bonus with the 8% roll up and those higher withdrawal percentages, I haven't seen anything to beat it. But Emeritus does have a competitive product in the early years for the guaranteed income. And with that, I think that's all the questions we have. So hopefully that gives you an understanding of the features and benefits. Like I said, please reach out to me if you have a case, if you want an illustration, if you want to see this product in action, if you have a client who you think it may be a good fit for, especially with the amount of people that are retiring this day and age with demographics and the baby boomers. It makes a lot of sense to have guaranteed income in your retirement. And with every people say about annuities, there's been studies that people who have annuities have the happiest retirements because they're not worried about those market fluctuations that you have in variable accounts where you're down 20 and 30%. And I've lived through that when people are very stressed because their 401k is down 30% and they're getting ready to retire. I've seen it where people had say, hey, I gotta work for 2 more years because my 401k has, or my IRA is taking a hit. So to avoid that, this product is great. There's a couple other questions coming in that I'm seeing. Is this the only product Pinnacle has with Nationwide? No, we also offer their multi-year guaranteed annuity, and we offer their SPIA as well, which is a single premium immediate annuity for income. But this is the fixed indexed annuity, which is a really strong, and in most cases makes a lot more sense than going with a single premium immediate annuity. We have a question. Do you tend to present multiple options to clients? It's entirely up to you. When you have a client and they're looking for guaranteed income, You could give them some choices, but usually they're coming for you for that expertise, and you can let them know that you've done the research and found the best product. But in some cases, clients want to see it. At the end of the day, with any of these guaranteed income products, the income amount is the only thing that matters. And I highly doubt you're going to find anything with a higher income amount than this product. But you can definitely give options if the client wants to see options. And all right, that's about it. I think we're good for today. Please reach out to me with any questions that I may not have covered, or if you're unsure. I think you'll be pleasantly surprised if you offer this product to your clients and what it can do for them, especially on that guaranteed income front using the bonus rider. So with that, we're going to end this today. Thank you all for joining me, and look forward to seeing you on the next webinar. Have a great day.